Hi, I am Anna. I come from www.ntvforex.com. Poland to publish June real economy data. http ntvforex.com news ID B2798F 7/20/2027 23:28 This week in C. Polish real economy data for June and the central bank meeting in Hungary will be in focus. Poland will be the first country in C to publish its June industrial production and retail sales data. Both sectors should continue the recovery, but the annual figures will likely remain in negative territory. We are slightly more pessimistic compared to the market and see industrial output contracting by 9.2% YY due to the closure of some coal mines in June. Retail trade should also increase, but the rebound could be less impressive than in May. We see retail sales at 4.7% YY. Last but not least, the unemployment rate will complete the labor market statistics published last week. After this week's releases, we will provide a final GDP nowcast for the Polish economy. It currently points to milder contraction of around 3.0% YY in 2Q20. In Hungary, the central bank is expected to cut the target rate by an additional 15 BP to 0.6%. Deflationary risks and supporting the economic recovery are the main reasons behind further easing. All in all, the MNB would like to see rates as low as possible without any sharp depreciation of the Hungarian forint. In our view, monetary policy should remain on hold until the end of this year. The second week of July was the first since mid-April that showed a drop in the C Recovery Index. The index decreased from 0.8 the previous week to 0.76, on the back of falling mobility in grocery stores and workplaces. However, this could be a seasonal drop, as summer holidays began in all C countries. Despite this, electricity consumption continued its upward movement. Capacity utilization in the automotive sector remained unchanged. The Eurostat was trending up and the VIX index was mostly falling last week, but this failed to bring about an appreciation in regional FX. The forint and zloty were on a roller coaster ride, but both ended the week closer to their initial levels than during the swings. The CZK showed more stability, courtesy of increased rate expectations after the high inflation print a week earlier. The HRK was also trading pretty close to the newly established central parity of 7.5345. As for the outlook for the EUR/RK, we see the 7.50–7.60 band prevailing, with the average being slightly above 7.55. Yields and rates did not move much in the region apart from Czechia, where longer-dated yields went up 15-0 BPWW. The move was similar to the change in the swap curve. Obviously, higher than expected inflation made investors think that the previously pre-COVID rather hawkish central bank could again show its true nature. We expect 10Y CZK bond yields to edge up further this year. The NBR also released interesting information last week in Romania. While the central bank bought just RON 500 MN of government bonds in June, they purchased around RON 400 MN in the first half of July. As the move came after some slight increase in bond yields, we think that this signals a preferred level by the NBR. It seems that, in the case that there is no big turbulence on the market, nominal yields above 4% would not be tolerated for a longer period of time. Download the full weekly Focus Poland. Subscribe our channel to receive the news as soon as possible. Thank you for watching.